Hi, everybody. Bob Icino from the Stock Think Tank, co-portfolio manager, along with Mike Arnold, here with your weekly update. It is November 30th, so last trading day of the month of November. Only 1 month left, and I just don't think there's any way the S&P 500 can catch us and the performance we've had in the Stock Think Tank. So let's talk about the general markets first. What we're seeing is sort of flattening out of yields. Bond yields really went nowhere in November. When you look at where they were as of pre-Thanksgiving holiday, they were essentially unchanged, with the 30-year yield a little bit lower, actually. We're seeing more of the same today. You're going to hear on financial news media about the record performance of the indexes through the month of November. But remember something. As I look at the performance of the S&P 500 in October, October was down 2.33%. for the S&P 500. Stock Think Tank core portfolio is up 4.3%. And part of it is because of the way we do things. We're involved in stocks that go lower as well. You look at Intel, for example. We owned Intel, but we got out of it before it collapsed. We owned PayPal, but we got out of that before it fell. That's the kind of thing we do to earn the beats of the S&P that we provide to our clients. So now you're looking at one of the best months in a long time for the S&P and for the other indices as well. Despite today's sell-off, market's still open as I speak to you right now. But you're still going to have a situation where we underperform this month. But when you look at it cumulatively, I don't see how the S&P catches us this year. I don't think there's a way for it to catch us. So keep that in mind when you're looking at things. Now, a lot of you got into AMD, Big Lots, and Pfizer through the newsletter. And when you look at what's been going on with those, you're looking at a recapture of break even to slightly profitable for Pfizer. We never got to our stop for Pfizer. We're now trading a few cents above our entry level as I speak to you right now. That's a good thing for us. That's a big win. We don't consider it a loss until we've covered it as a loss. We also don't consider it a gain until we've covered it as a gain. Stocks in your portfolio, while they hold value, are not really gains until you've locked them in. This is the argument I have with the buy and hold people a lot of the times, is that they think they have a certain amount of money in their account, but they don't. They have a certain value of stock. They don't have the actual money. Big Lots fell back a little bit as it turned profitable and fell back for us, down a little bit more than $1 from our entry price. AMD, however, performing very, very well. Our entry price on AMD, $85.05. Currently, as I look at it, it's $91.94. So doing really well on that one. We've even, if you didn't look at the email, we bumped the stop up. We eliminated risk on AMD. So our original stop was $73.45. Now it's $77.95. And we'll do that with all the positions that turn profitable. That's just the way we manage things. So as I look at the overall portfolio with the special plays as well, Activision is moving back toward our entry price as well. It's only trading a couple bucks below that now. Silver is getting beat up pretty bad. Silver is part of this reflation trade that never really materialized. So we might be exiting that silver possibly today, but maybe not. We'll see where it closes. And then the Euro trade doing well. We entered the Euro trade at 111. It's up above 112. The FX ETFs move a little bit slower, so therefore it's a larger position for us. Actually, it's our biggest position size in terms of shares, so we know they don't need it to move that much. It's a balanced position in terms of risk, but we got more shares on in that ETF than most anything else. And then Lululemon, we entered Lululemon at 341. It's trading 367.21. Really good trade. Again, that's a special play. So if you're just in the newsletter service, you didn't get that Lululemon trade. But make sure that you adjusted the thought process of your stop for AMD, because you should have gotten that. Now, again, we talk about what's going on in the general markets. We're starting to get a vision of what President-elect Biden's cabinet's going to look like. Janet Yellen, a very easy money appointee, therefore very easy for the markets to accept. The Treasury Secretary doesn't have a ton to do with how much money's in the economy, but has quite a bit to do with debt and has a big influence on fiscal spending. So expect her to want to get a lot of spending out there, which will help the markets in the short term. But if you think volatility in 2020 was big, 2021 is going to be way worse, and 2022 is going to be way worse. So you're positioned well with us, because that's why we take profits. When we take stocks off the board and put cash into the bank and then take a portion of that, invest into another stock, that's a way that we manage and tamp down the volatility while still being involved in stocks. The Fed wants you in stocks. So why not oblige them? Just don't hold on to them for those downdrafts that are coming. I think there's going to be 2 corrections in 2021 and possibly a bear market in 2022 if it doesn't start with the second correction of 2021. So that's your update for this week. The market's going to have good performance, but remember that the market last month was down. So it's coming off of a lower area, and we are still going to be absolutely killing the S&P when we get our final numbers for November, although we probably underperformed in November. We came back quite a bit as I look at our spreadsheet right now. We've only got three of our recommendations in the negative, and only one of them is in the core portfolio. The rest of the core portfolio is all positive. Thanks for watching. This is Bob Iaccino with your weekly update, and I will talk to you guys again next week.